Okay.
Hello, everyone. This is Realtor Linda Peltz. Today I'm with Dennis Keithley, and he's going to tell us all about reverse mortgages. Take it away.
Okay. I'm not sure about tell you about everything. There's a lot. So the main coverage is a lot of people maybe have heard of a reverse mortgage and maybe they know exactly what it is. So a reverse mortgage, all it is simply an FHA insured loan backed by the FHA. And if for someone that's at least 62 years old, or at least one person has to be 62 years or older, primary residence. And then the criteria of how much money could be borrowed or loaned with the FHA insured product would be age of the youngest person being entitled, the estimated home value, and then be the interest rates. So what would happen is that say you have a mortgage, we pay off the mortgage. So almost immediately you have cash flow, so you don't have to worry about it.
And they
Nice thing
basically
too,
take out the equity that's over whatever the mortgage is.
a portion,
Okay.
right? And I would say right now, someone 62 probably need to have at least 65% or more equity. It depends. We'd have to take a look at it and age. So you can have someone 62 and someone's 55. So we work on the age of the youngest person, which should be 55.
Okay.
And it's a very misunderstood product. I've been doing this, I've been in the mortgage business 20 plus years, been doing this like 13 plus years. And we always get the same question to say, hey, Dennis, you're going to take my home. I'm not going to be on title. You're going to boot me out, when I'm 99 and stuff like that. That's further from the truth. You're going to be on title. It's going to be your home. We're not going to take it away from you.
You're going to do the maintenance on it.
Yes, exactly. You have to pay your property taxes, homeowners insurance, just like a typical mortgage. The only difference is that you don't have to make a mortgage payment.
Don't have to make a mortgage payment, and you do
Right.
have to live in the home.
Correct. You can make a payment or not. I'd say 98% plus the people don't make a mortgage payment. However, it's really an option, for the client, whatever they want. And we start out, it's like we're having now a conversation. Tell me, Linda, what's going on with the home? Uh, how long are you going to stay here? Rule of thumb is they should be staying in the home like 4 or 5 years. If they're going to move, then we can look at a purchase because we also can do a purchase program with a reverse mortgage as well. And then, what are your goals? If you had some cash, what would you use your cash for? Most of the people is just pay off credit card debt or just to set up an emergency fund because 99% of loans are variable or adjustable. That includes a line of credit with it. So what is nice is a line of credit is sort of like a buffer of money there, like emergency fund that can be drawn upon. So you can have some money at the close of escrow if you like. You're going to get a monthly payment for life, or you can get X amount of dollars for, say, 5 or 10 years. So it's a very flexible product. It's not like a one and done type of product. And the thing that's nice about the line of credit, the reason why people like it, it's as compared to a HELOC or home equity line of credit, can never be frozen, can't be taken away from you. And even if home prices go down, it's still in place, irregardless. So it's going to
Mhm.
be there, as long as you live. I've seen instances, depending on the value of the home, is sometimes people at a line of credit, they start early, say 62, up to over $1 million. And it's
Mhm.
there to use as they want. So the use of it many times would be something like a legacy. Say the parents or grandparents might pay like you did, help your children through college, or a
Mhm.
down payment for realtor where it's nice a down payment on a home, get them going, something like
Right,
that.
right. Or
Or
say, for instance, they the kids move in and then the parent gets whatever, to where they can't take care of themselves and stuff, and they want to, they have need a little bit medical care or something like that, and then the kids could, I mean, refi it if they found they had to put the parent into assisted living or something.
correct.
they could refi it into their name or something too. So,
Right. Well, in an instance like, if something happens, like they have to go to assisted living or call it a hospital, so it's no longer their primary residence,
mhm.
the children of the estate have a couple of options. They can either refinance on what is owed and then pay roughly 95% of the appraised value, or it's sold. Any money that's left over then goes to the heirs or estate.
Mhm.
That's another myth. A lot of people think, well, the bank's going to take the home and get all the
Nope.
proceeds.
They still have to sell it
That's
or
right.
refi it or take it over.
Right. So it goes to the kids or the estate so they can do with it as they want now, like in 2008, 2009, where we had the debacle and the real estate or houses and everything sort of crashed. So let's say you owe uh, $300,000 on your home and the value of the home is $250,000. Part of the FHA, the mortgage insurance premium, will make up the difference. So the estate, the heirs never have to come up with the difference. So it's another thing I really
Well,
like.
in today's market, that doesn't happen too
Correct.
often unless they
Correct.
just literally the
Right.
house has fallen apart and never, ever, ever, ever maintained it. But right now, the house prices are going up so fast, more than likely there's
Absolutely.
equity in the home. Because I think when you do those reverse mortgages, don't you keep like 20% equity in the home as a buffer
Probably
or
you,
something?
I saw the one the other day, she was like 93 and she had like still a substantial amount of equity. Again, we don't equity strip or take the equity away. So you'd probably have at least 35% equity in the home.
Hmm.
So
Yeah.
which is nice. So
They
it's
don't
this
lend
sort of
100%, I guess is what I'm
no,
saying.
no,
So
no,
there's
no.
always going to be a little bit. And then with the way the market's going up and the home prices are going up, there's more than likely going to be a pretty good chunk of equity still sitting in there when the kids take it over, and if they want the home, I mean, they can put a loan in their name or they can sell it or they could, but they're still going to get
Exactly.
that equity out.
Exactly. The other thing too is sometimes another factor is the kids want the home, or they think that they want the home.
Mhm.
But then it might not be as updated as they like, or designs and stuff like that. So almost always the kids never want the home. They want the dosh. They want the
Yeah.
cash.
Good
They want
portion
the
of them.
money. Exactly.
Well, I deal with that on the other end, as far as the realtor and I'm set up. I know you have different programs available, but I have a program available where mom and dad's home needs some updates. We're selling it, and for the kids, and I'll send my contractors in and spruce it up and give it a little bit of update. And I mean, we don't put a ton other than we make it clean, livable, and we
Sure.
fix. I mean, if it needs painted or whatever, some of the aesthetic part of it, uh, and then right, it gains automatically a ton more equity, right? So, because all homes will sell as is, but it's just where at the range is it going to sell,
Exactly.
right? If you had no updates, no maintenance whatsoever, you're going to be in the low range. The identical house that's had all its updates, maintenance is going to be in the high range. So we're just trying to, when we go in, the contractors go in and clean up these properties. Maybe mom and dad was a hoarder or you know, I don't know, maybe
Yeah.
maybe it has termites or whatever. We'll go in and fix whatever it is that this home's problems is so that somebody can take a suitcase right in and move right in and not have to do anything for a few months, as far as maintenance or anything. And
No, that's good added value. Well, we do the same
right.
thing
And
because
then the
the
kids,
vast
there's
majority of the seniors want to stay in their home. They
right. And
really
then
don't want
there's
to
no
move.
maintenance, there's no fees for the kids. All those contractors are paid right out of that equity, and then they get that extra 100,000 of equity that was sitting in that house that they couldn't have got because it didn't have the updates and maintenance and different things.
Exactly.
So it's kind
Exactly.
of a nice program on my end, and it kind of fits right in with that. Is okay, you kids, mom and dad, they're gone. What are you going to do with this house? If you want to sell it, let's get you the full equity out, because that's what I do. I protect my clients, whatever client I'm representing. That's my goal, is to get them, full equity out of their homes and different things. So I'll go in and take those set of contractors I have. We'll do all the repairs and maintenance and different things that it's been lacking because mom and dad's gotten old and they didn't kind of keep up with it. and then we'll put it out on the market, and you may get an extra, maybe they had to put 50,000 into it, but they'll get an extra 100,000 out of it. So it's
Oh,
just,
exactly.
they didn't have to
Exactly.
lift a finger. All they have to do is sign the paperwork at escrow,
Right.
and it's a done deal, and they got all that extra equity. We kind of ended up with the program, ended up being the kind of their own flipper. I mean, these
Right.
investors come in, buy them cheap, right? Because mom and dad didn't keep up with them,
Yeah.
and then they turn around and they take all that equity. They put the fixes in and get it up to snuff, and then they turn around and
Oh,
they took
yeah.
that equity. I try to avoid that. Your parents worked hard for this. They wanted you to have it. Let's get you full equity out of it. So it's kind of
Exactly.
a program, but it fits right in there with that. And you're kind of the same way. You're not, your goal as a lender is not to take their equity. You're just helping them get through their older years. And then the
Right. And
kids,
just
there's still
basically
something there left.
age in place. And the biggest
Yeah.
fear they have is out living their resources.
Hmm.
So what happens is that once you do retire, you have X amount of dollars coming in.
Yeah,
And with
that's nice.
inflation and taxes now, homeowners insurance, depending where you live, all that's getting jacked up, food. So how are people able to survive? So a lot of
It's tough right
seniors have
now.
a lot of credit card debt. So they're
I know.
putting
Well,
stuff.
things still happen whether
Oh
you're
yeah,
a little old and not working or not. But
yeah,
another thing is, you mentioned they could make the house payment. Okay, they want to leave a little more equity to the kids, right? It's
yeah,
basically a savings account. Your house is basically a savings account. They want to
exactly,
leave a little bit more equity to the kids. Make the payments every month that you can. But I don't know, Christmas comes along and you want to buy a few more extra things and don't want to use that. You want to use that saving money that you're putting into your savings account for your kids. You want to use that for Christmas, don't make the payment that month, right? And then,
exactly. No, it's a
January
very
rolls around.
flexible product. That's the other
It
thing I
sounds
forgot to
like it, yeah.
mention is now, do you ever see a situation like gray or silver divorce on how to handle the home?
Oh yeah, all the time.
Okay.
I handle so many divorces. Yeah.
Okay. So with the reverse mortgage, there's enough equity. One partner can buy out the other if they want the home. The other one have money to buy a home on their own, or if it's sold, then both of them have money, so they could also go and buy a home on their own as well. So
Right.
it's a lot of the divorce attorneys I spoke to, the Federal Association of Divorce Attorneys a couple of years ago, they weren't even aware of that program at all. So it's a great way because it's the biggest asset is normally the home, or
Hmm.
if you have 401k or other investments. So why have to liquidate that and pay taxes and then all of that? So we're not let the reverse mortgage sort of help you out through
I
all of
think the
that.
biggest thing with divorces is whoever the aggravator is in the divorce, you gotta be non-reactive and chill out and start thinking about what's best for both of you instead of just
Right.
trying to damage the other person beyond repair, because you're damaging yourself. Use your head, people. you
That's
know,
right. No, and
okay, they're
sometimes,
getting a
yeah,
home out of it, but stop
right.
being so vindictive, because you're going to miss out on a home too if you don't pay attention. So,
Yeah, because you probably seen divorces. Some have gone for a couple of years. So mine went on for like 3 or 4 years. Some have been 10, 20 years.
yeah, they just keep
Which
fighting
is
back and forth.
really
And it's time
unusual.
consuming and it's
Oh yeah,
expensive,
and
because
expensive.
the
Oh
only
yeah,
one winning there is the attorneys. I mean,
oh
okay,
absolutely.
yeah, you
Oh
guys want
yeah,
to keep fighting for 10 years. Yeah, okay.
big
You're going to
time.
have to keep paying me, whereas if you just use your head, you're ruining yourself, and start kind of coming to a resolution here. We could be done and you don't have to pay me no more.
That's
That's
right.
what slays me about people. I've seen so many divorces, and some of them are amicable, but I've seen
Right.
so many where there's always just that one aggravator, and it's like, well, they're divorcing me, so I just want to make sure they're out on the street and not, and they can't have a house. Yeah, but you're losing the house because you're being so hard to get along with.
Exactly. Exactly. So yeah, it takes two to tangle, and unfortunately, hopefully they all turn out to be amicable.
Well,
That's what
it's much, it's you can do a better job for them if they will just, number one, listen to you, but number two, just be amicable with each other. I'm not asking you.
exactly.
I mean, I can sign paperwork in two different places. That's not a problem for me. But be amicable and stop being so hard-headed that you just want to damage them so bad because you're damaging yourself. So stop it.
Right, your credit and everything else. So, I mean,
Yeah,
it's sort of like damage control. So,
it is. It is. And I don't know whether it's just lack of education or just total vindictiveness, but divorces are a little
vindictiveness, it's a
very
mental,
emotional.
oh, extremely emotional, right? So you have to. It's hard to separate the two, but if you
Hmm.
can, and you have a good divorce attorney or attorneys, where they try to make an outcome that's a win-win for both parties. So that's the ultimate goal, if you can.
Well, with that reverse mortgage, I don't imagine you delve into the repossession very much, right? Because they're not making the house payment anyway. You don't have to worry about repossessing the
Exactly,
house.
exactly.
So you probably don't
Well,
deal with that one very much, the foreclosures and stuff on that reverse
right.
mortgage.
I mean, don't get me wrong, reverse mortgage could be foreclosed upon, like you said before, as long as they're making their tax payment, homeowners insurance, HOA, or upkeep, it's not going to happen. Now, whereas if you had like same thing with a normal mortgage, or even a home equity line of credit, that you have to keep making a mortgage payment, miss a mortgage payment within 30, say 60 days, they're knocking on your door, putting for a closure notice on your on the window or door or something like that. So
Hmm.
with the reverse mortgage, that won't happen. But I mean, it could if you don't make the payments. But
Right.
the very safe, secure. It's been around for like 60 plus years, and over 1 million have been done. And I think there's like 93% of the people that got a reverse mortgage have been very happy with it. They're glad that they did it.
Hmm.
So it can be very positive. However, like anything else, it has to be right for the client.
Right.
Not right, we don't want to do it.
Right.
If
Yeah.
we don't want to do it,
Yeah, that's like any other product out there.
sure.
It has to fit the situation. And I tell people all the time, there's two identical homes, but there's two different lives going on in that home, and it's going to be two very different transactions. It is not, I mean, to a certain point, being a realtor is cookie cutter, but it's a cookie cutter for that instance. Okay, so that instance is different than that instance. So this is the procedure for this instance, not
Yeah,
for this instance. So,
exactly. And then with you now with the new changes with the
oh
car,
yeah.
the no form and all that stuff.
All
So
those law
it's,
changes that really affect, and
yeah,
I'm still, it's so interesting. I'm a little busier than some realtors, not all of them, but I'm educating the other realtor on the other side because they haven't sold one since last year. Well, okay, well, these are
exactly.
the new procedures here, and then okay, read this part of the contract,
That's right.
so that you're updated on what's going on now. And it's always interesting bringing in new team members to work with on where are they at, did they keep up with all the law changes and different things. But yes, we had a lot of law changes, and it is affecting this month's sales. I mean, and
Exactly.
how you work with the other team members, because once you go into a transaction, it's not just me. I'm only representing one party. You have many
Exactly.
other agencies that we work with trying to get these homes closed for you. So it's a little different than most people I think, and it's the battle with the realtor.
Yeah,
No,
it's just a
I'm here
change
to
of mind.
protect you. You don't have to battle me. I'm here
Right.
to protect you.
So a
So,
lot of people now think they can sell their home for free. So that's the biggest issue. That a realtor
well,
has
it
to go, no,
doesn't work
well,
that way.
I'm not going to do it. Talk to someone else.
Hmm.
You don't work. You don't work for free, do you?
Which is why they did that law change, because the listing agents weren't doing their job and informing, and if they were informing the sellers weren't listening. So this way it kind of forces the seller to hear, and it forces the listing agent to have this conversation with them that they just weren't doing. They weren't doing their
Exactly.
their due diligence.
Exactly.
And that's why these law changes came into effect. Okay, since you're going to force us to protect you and force you to do your job, here's the new laws. And we're going to penalize you, the listing agent, if you don't do your job now. And the sellers, same with you. Okay, since you're being stubborn, we will take it away. We won't expect the listing agent to have that conversation with you in the beginning, because obviously it's not happening. but you're going to be really surprised during the transactions because now here it is. Here's the new law changes. So, but
Oh
you're going
yeah.
to hear about them. It just may be a little bit later in the transaction though. So yeah,
You
no,
know,
it's been
how aware are the consumers of the new laws that will affect the end of August, September?
they know there was some, but
Okay,
they don't. You do a lot of education at this point and a lot of explaining, and the
sure.
buyers come in and it really isn't a ton different other than different paperwork. And there again, the buyer's agent needs to have a better conversation with the buyers. But as far as the end result, it's just the tools that they gave us to get to the same end result. So the end result's still kind of the same, but you do a lot more education on how do you get to this part,
Exactly.
because now the buyers are involved and have to sign for certain things that they never had to sign for, that we counted on the listing agents to do their part and get it taken care of in the beginning, and they weren't doing it. So the tools, that's all it is. The tools changed, which was the laws and the paperwork that went with it. So it is still kind of the same end result. It's just realtors need to do a better job at having the conversations with both buyers and sellers. And that's really all that their goal was to transpire. As far as the actual way real estate works, it still kind of works the same and the end result's still the same. Sellers still will end up paying, the buyer's fee. It's just now the buyers kind of negotiate their own fee, and sellers quit paying the listing agent, twice what they're supposed to have, and you need to start paying the buyer's agent. They're the ones actually bringing in buyers. So
Exactly. And then they come to open house, they have to ask a form to fill out to come in, are you
yeah.
represented, so on and so forth. So
And we're
there's
not
no
really
thinking.
supposed to talk to them at the open house if we're not represented. They're welcome to come through the house and sign this
Sure.
paper that we're not representing them. And, you're still going to have to ask your questions to whoever your agent is that's representing you. But I will be in the same house as you, but, don't ask me any questions. Just go look, and then ask your
Yeah.
realtor for all the information.
Yeah.
It's just a little different. But like I said, it's just the tools. The way real estate works is still kind of the same. It's just the tools they gave us and the laws that came into effect. And it's a lot more educational part on the realtors, or at least it should,
Right.
if
And
they're doing their
education with
job.
us on the reverse mortgage side is so educational because I don't
Yeah.
want to tell. I want to answer questions, go through it, be sure it's right. If it's right for them, then we'll do a
And
proposal so you can
that's
qualify
exactly what I
for it.
do. If it's right for you, may not be
Right.
right for you. I don't know. Hey,
Right.
Dennis, it was great seeing you. What's your contact information here?
Okay. The phone number will be 559-917-4955. And my email will be senioreducator@gmail.com.
Perfect. And I will leave it everybody down below. So don't think you had to
Okay,
run
say
out
hi
and
to
grab your
Erica
pen.
and Eric King. Erica was at where my mom was assisted living, so that's how I met her before she got married.
Hmm.
So I've known the Kings, well, not so much him, but her for like 7, 8 years, something like that.
Yeah. Hmm.
So it's a good team. Well, thank you for the opportunity and more
Thank
than
you for
happy to answer
joining
any
me
questions
today.
that people aren't sure of. Thank you so much, Linda.
Everybody, this is Realtor Linda Peltz. I love having these candid little talks with all our wonderful vendors around town. Hopefully, it gives you a little insight. Give Dennis a call. My license number is 01997670, and I'm here for all your real estate needs and questions. Have a wonderful day.